Hello investors and future investors, welcome back to the channel. On today's video, I'm going to show you how to select put options in order for you to sell. I will walk you through the exact criteria that I use in order for me to make a decision on which put options I'm going to use in order to sell my options. If this is something you're interested in, then welcome to Investment Gains. Let's jump right into it. Welcome back investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to walk you through every single criteria I use, and you should probably consider this strongly before you decide to sell options. For today's video, we're going to be using Mara Holdings, ticker MARA. Now let's go ahead and get down and dirty with options. So firstly, we're going to go ahead and we're going to open up the option chain. And to do that, we're going to go to trade Mara options. Now, we're going to be selling put options. And I know it's obvious, but always make sure it says sell and also put. Okay, one of the first criteria you need to consider before deciding which strike prices you're going to choose to sell put option is going to be your date. Now, let's go ahead and open up. As you can see here, there are several dates and you can select any one of them. The selection of your date is going to depend on your own personal criteria. For example, when I sold put options earlier in my career, I used to sell weekly put options. The reason I did that is for me to get consistent cash flow into my Robinhood account. Now that my account is growing, I'm now able to go a bit further out because I'm now able to give myself more time. So that being said, I'm going to go ahead and select the December 27th strike price, which gives me 10 days. You feel free to select whichever strike price you think that works for you. So we're going to go December 27th. Now, in order for you to select that strike price, in order for you to sell puts, there are other things that needs to be considered. Now, you can select any strike price above or below the current share price. Now, let's take a look at the strike prices above the current share price. Now, a key thing to note, if you're going to select a strike price above the current share price, you can see here, as you keep going higher, your chance of profitability reduces. Now, can you sell a put above the share price? Absolutely. Is it the best idea? I think not. In my personal opinion, I think it's way more lucrative for you and your account if you were to select your strike price below the current share price, and that's what I do. So, key note again, every price that goes lower, further away from the share price, as you can see here, your chance of profitability is also going to increase. Now, why would you sell put options if you don't want a higher chance of profitability? Hence, it's way better to choose your strike price below the current share price. Okay, so for this option, I'm going to be going with the $23 strike price. Now, with the $23 strike price, there's a bit of positives that's going to work for me. One of those positives is going to be my chance of profitability. As you can see here, my chance of profitability is going to be 76%. Now, the reason why I'm choosing a 76% chance of profitability because I will take any profitability that's higher than 70%. And the reason why I choose that is because I'm now able to go out further, which is going to be 10 days. Initially, when I started trading, I used to do 80% or higher. And that was because my date was only 1 week out. So feel free to make adjustments as you go along. Another positive that I'm going to be getting from choosing the 23 strike price in order for me to sell is going to be my premium. In the option world, I will be receiving 0.60 or 60 cents. When you translate that to the real world, this is going to be $60. Each option contract is multiplied by 100 shares. Now, there are other factors that goes into this. So in order for you to get those, let's go ahead. We're going to click into the strike price, and that's going to open up what we call the Greeks. Here we are in the Greeks, and what the Greeks does is that it gives you additional information for you to make an informed decision. So let's go ahead, and we're going to start off with the delta. So as you can see here, the delta is 0.23. The delta and your chance of profitability, they have what's called an inverse relationship. Whenever one goes up, the other one goes down. Let me show you. So your chance of profitability is going to be 76% here. So your delta should be around 23, 24%. The two of them will always equal to 100. So we're going to get back to the 23 strike price, but let me just show you the relationship by going into the $24 strike price. As you can see here, the chance of profitability here is 70%. So if you had to guess it, what would you guess the delta is? You're absolutely correct. The delta should be 0.3. There you go. 0.3. Okay, so just remember that there's an inverse relationship between your delta and your chance of profitability. Now let's go ahead and get back to our original strike price. The delta is another key factor that you want to consider before choosing a strike price in order for you to sell put options. Another key factor you need to consider is the implied volatility. The implied volatility on this stock is pretty decent. In my opinion, any implied volatility from 50% and down is very, very low risk. Any implied volatility between 50 and 100 is medium risk. And of course, everything above 100% implied volatility is going to be very high risk. So your implied volatility is going to help you make a decision. What is the relationship between your implied volatility and your premium? The higher your implied volatility, the more premium the strike price that you choose is going to pay you. So that's another thing you really need to consider before choosing your correct strike price in order to sell options. Now, your open interest. Open interest here tells you that there's 1,723 other investors that are considering this strike price, which is the $23 strike price. So the more open interest you have, it tells you that's the amount of people that are interested. Okay, so let's get back out of the Greeks for a while and get back into the strike price. So in order for you to sell put options, you must first be bullish on the stock. So always make sure to choose any stock that you're bullish on. The reason for that is that if you eventually do get assigned on the stock, then you're going to have that stock in your portfolio and you don't mind owning the stock because you're bullish on the stock anyway. So what exactly is the goal of selling put options and choosing that right strike price? Well, the actual goal of doing this option strategy is going to be to make a premium, first of all, because you're selling. The other goal is going to be to acquire that stock at a reduced share price. So, for instance, come expiration date of December 27th, if Mara is trading below the $23 strike price, now you're going to be assigned, means you're going to have to buy 100 shares of Mara at $23. The good part about this is that you got it for $2 less than what is currently trading at. Now, choosing strike prices in order for you to sell put option is not a guarantee that you're going to be successful with the trade. However, by choosing the correct strike price, choosing the correct chance of profitability, and receiving a decent premiums, all these factors give you a higher chance of the trade going in your favor. So here's my take on selecting the right strike price in order to sell put options. You need to find a balance that works for you. Find a balance between your IV, your implied volatility, your chance of profit, and also your premium. How do you continue to be a badass when selling put options and continue making consistent income? Well, here's a few things that you want to consider. Always keep learning about options trading, not only selling put options, but learn other option strategies as well. Once you do that, you're now able to compare the different strategies and see if selling put option is still going to work for you in the long run. Another key thing you need to do is use a trading plan. Before you get into any trade, make sure you have your entry, make sure you have your exit, and make sure you know how to get out of a trade before you get into the trade. Another factor to do is to use a stop loss or use what's called a limit order. Now, the last thing you want to do is look for like-minded people and join channels just like this one that focuses on your strategies, and most importantly, leave your questions in the comments below. Now, until next video, keep choosing the right strike prices in order for you to sell put options.